Biddles group. We are here, have this beautiful view and my plant back there. I'm glad you all came. So we've got some exciting news that occurred today. I'm going to share my screen. I've created a nice presentation for you so you can follow along. We'll hit the agenda and we will go from there. I'm going to try to make this brief as usual. We know how I can get those. So I'm going to share my screen. And I believe it is screen two. So the action that we discussed today was the federal funds rate. And I believe I should already be up there, and hopefully if I'm not with you, I have to record this again. But federal funds rate, and then this Friday we have something called Black Witching. And so what you need to know, of course, this is from you, coming to you from Biddles Investment Group. We are National Financial Educator Council Award recipient 3 years in a row. Fox News, we've been featured, Yahoo Life, and a bunch of other media awards and recognition. So it's coming from a credible source. I want you to know that it's coming from a credible source. A little bit here about me. I'm Brandon, an investment insights consultant at Biddles Group. Here are some of my credentials here. And about us. So I want you to know that this content is to educate, inform, and analyze. We do a lot of deep research here. We educate. So it's only for educational purposes, does not constitute financial advice. Please consult a licensed financial advisor for personal investment decisions. Your tax advisor, your legal, your lawyer, or your financial advisor. And so what we like to do here is we like to start off with our mantra, through the power of God, of course. Your gifts and your talents will enable you to achieve the life you envision. So if you'll say it with me, this is my path to wealth. I have the clarity to see it, the confidence to walk it, and the courage to build it. I will master my money. I will invest with wisdom. I will grow my business with purpose. I am building wealth that lasts for myself, my family, and my community. Today, I take one step closer to the life I envision. If you said that, I want you to feel it and I want you to feel good about it because that's where we're going to take you to the life that you envision. You just stick with myself and my partner, my pair money, who we partner with to bring you great educational content to educate you and build your financial future. Today, what we're going to learn is quick definitions. We're going to review the federal funds rate. We're going to review Black Witching, and then we're going to dip into the investor IQ, our trading journal, and our chart review. So just bear with us as we go through the presentation here. So what is the federal funds rate? This is the target interest rate at which U.S. banks lend reserve balances to other banks overnight. So I will lend you a reserve balance. If you're out of money and you say, hey, we need a reserve balance, I'm going to lend it to you at the federal funds rate. The Federal Reserve Federal Open Market Committee, or FOMC, they set this target range and it influences interest rates on everyday consumer loans like mortgages and credit cards. So that was the point that I was going to bring up. If you've ever noticed or read the disclosures in your credit card statements, they say that they tack on 10% on top of the federal funds rate. So, for example, if the federal funds rate is 2%, they're going to add 10%. So your interest rate is 12%. Now, if it's higher, of course, excuse me, if it's higher, then let's say it's 5 or 6%, we know the interest rates are high. So they will tack on that 10%. It'll increase your interest rates to 16%. So if you never notice any, even those updates, they'll send you email updates, change of terms, change of service. Those things are very important to know how much interest you are paying. And please don't be afraid to do balance transfers. Please don't be afraid on 0% interest. Please don't be afraid to call your creditors, any creditor, mortgages, your credit cards. Mortgage might not be in because you signed that for a long period of time, but Everything is negotiable. If you don't try, you're going to be stuck paying the interest rates that you pay. And so we can grab a little bit of savings by just making a phone call and negotiating a better rate. We can now take those savings, build our emergency fund, and then we can start to invest what we're going to talk about to you today. So, said in another way, a little bit simpler, the federal funds rate is the overnight interest rate banks charge each other to borrow reserve balances, a target set by the Federal Reserve. Sectors. So, what I wanted to know is what sectors are going to benefit from a rate cut. We're going to take a look at Yahoo Finance, see what did good today because there was a 0.25 rate cut. But it says here technology, as lower rates increase the valuation of future earnings, real estate and home builders due to lower mortgage rates, consumer discretionary as increased spending is fueled by lower borrowing costs. So we know that home builders, real estate's been coming up a little bit. Consumer discretionary's been on fire. Technology's been on fire. And so um, we also want to pay attention to high dividend sectors like utilities, telecoms, which become more attractive when buying yields fall. So what happens here is what this is talking about is if I have a utility or a telecom company, it is capital intensive. And so what I'm going to do to fund my new telephone poles, I want to expand, right? And I want to fund new telephone poles in a certain area. I have to go out and sell bonds to get the money at a certain interest rate. So I'm going to sell these bonds at 5%. Investors are going to say, oh, that looks attractive. The company's selling bonds. They've been in business for a long time. They'll probably make good. So we have to sell it at 5%. Now, that's a debt on the company because we've borrowed that money from investor pool at 5%, we have to pay it back. And so what it's talking about here is utilities and telecoms, because it's capital intensive, because we have to go out to the public market with these bonds. Now our interest rates can be lower. Instead of paying 5%, I can pay maybe 3.5%. And that 1.5% gap can go to my profit, right? And so that's where the benefit comes in. So what I wanted to do is I wanted to dive into sector detail. So we know tech lower valuation is going to increase the company's future earnings, particularly growth-oriented firms in AI, semiconductors, and software. So we should see uh, NVIDIA and maybe AMD, some more semiconductors, Intel chips. We should see them to start to move. Real estate and home builders. I actually, and I forgot to underline this in the presentation, my nitpickiness. So, real estate and home builders. We have an investment group. We've got the Wealth Builders Collective. We've got other investment groups, private groups. You can ask to be invited, but it's invite only. Um, and so I was on a discussion with one of the members, and we discussed real estate and home builders. And he said, "You think home builders are going to go up?" And in the market today, I believe DHI, Toll Brothers, KBH all went up. We'll take a look at that. We'll see if that's the truth. And so rate cuts lead to lower mortgage rates. And that's going to make buying homes more affordable and stimulates activity in the real estate and home building industries. Now, keep in mind, mortgage rates are very high still. So from 7% to 6%, we might not see 5.5. I believe that if you build your own home, those builders are offering lower interest rates. And so we're seeing a rise in new home builds as opposed to if you sat and fixed and flipped a property. Someone may say, hey, why would I get that property? It does look beautiful, but why would I get that at a 6.5 interest rate when I can build exactly what I want? You know what I'm saying? At 5%. So we should get some activity here, but just want to give you a few examples to break down things, get your mind flowing, maybe spur some ideas. Consumer discretionary. Lower rates can encourage consumer spending by making it cheaper to borrow for large purchases. So think of furniture, um, Cars. So this might potentially benefit retailers, airlines, and credit card companies. So your MasterCard, your Alaska Air, your Delta, your Burlingtons, your Walmarts could potentially benefit them. Utilities and telecoms. These sectors, often considered high dividend payers, can become more appealing to investors seeking yield as interest rates on safer assets like government bonds fall. And then exporters and multinational corporations. So a weaker US dollar, which can result from lower interest rates, can make US goods more competitive for foreign buyers. And so now I want to talk about quadruple witching. This is a thing, this is an event that's going to happen this Friday. So hopefully you've digested the Fed funds rate. It's a positive thing for a lot of sectors. We'll check that out. Quadruple witching, though, this throws, some fire in the mix here. Quadruple witching is a quarterly event in the stock market occurring on the third Friday of March, June, September. That's where we're at today. And December, remember, Christmas time. So when four types of financial derivatives expire simultaneously. So a derivative is an investment that derives its value from another investment. So for example, a stock option, that option derives its value from the stock. Okay, so that is what is considered a derivative. And so what we have here is stock options, stock index options, stock index futures, and single stock futures. They're all going to expire simultaneously. What's the impact there? The impact is this convergence of expirations is going to lead to significantly increased trading volume and can cause heightened market volatility. Now, we look at the VIX. I believe it was at 15 earlier today. We'll take a look at it as investors and traders adjust or close out their positions. So we might see a spike in the VIX. I'm just going to make a note here. We want to check out Home Builder. We want to check out the Yahoo sector grid. We want to check out Home Builders. And we want to check out, I think there was one more thing, but it'll come to me. So we'll check some of these things out. We'll see what's happening in the market because not only we're going to give you the education, we're going to dive in, see what's going on. So what happens during quadruple witching? There's an increase in volume because everything's expiring, right? So these are automatic triggers which produce this huge volume. Traders are going to rush to manage their positions before the contracts expire. They may roll some positions, they may sell some positions. They're going to try to figure out how, what do I do in this position to decrease the risk and increase profit if possible. And so there'll be lots of movement, volatility. So all of that movement is going to increase market volatility. So it says here the increased activity and forced position adjustments can create larger and more unpredictable price swings in the market. So we got to be prepared for that. Forced adjustments. Investors must either close their positions, roll them over, as stated earlier, to a later expiration date, or let them expire, which can trigger automatic buying or selling of underlying assets or underlying shares to fulfill the contract terms. So why call it a witch? So the name is a metaphor. So this is just a side fun note. The name is a metaphor. It's drawing from the folklore of the witching hour, a time associated with supernatural events and chaos. So that's what they want to name this Friday coming up is chaos and supernatural events. Similarly, the high volume and potential market volatility on these days can feel like a chaotic or unpredictable time in the market. So I do know a lot of people, they may sell their, so actually, many strategies here. September has been known as a month that has historically declined 4% over time. So I actually talked to an investor today. He said that he's out for the month of September. He got burned too many times. He said, I'm not messing with it. And I applaud him because you got to have discipline in this market. Now, some of the individuals on the Wealth Builders Collective in the investment group, some stay out the week of the Fed. I would have preferred to stay out this week, but I had to stay in the market. Uh, Thankfully, we saw a nice boost in the market today. However, this triple witching, this supernaturalness, and this chaos is going to happen, or quadruple witching is going to happen Friday. And so many people don't want to be in the market there either. So make sure that, number one, we want to secure the bag. If we do trade, we want to um, decrease our risk and try to maximize our profits as best as possible. And we want to make sure that we manage that position. Okay, once that position is not working out, get out of it. You can tell if you're a trader if your position is not working out or not, or you can have a gut feel. Hey, it's going to do this, and then it might do this. Um, but if you have the feeling, I don't know, get out. Um, so this is still more information. This is the wrong title here, but this is what is the impact of quadruple witching to investors? How does it affect investors? So, opportunity and risk. The heightened volatility can create opportunities for traders to profit from price swings, but it also poses risk. Market uncertainty, a combination of expiring derivatives and speculative trading can make market movements difficult to predict. And then a focus on volume. For many investors, the most significant effect of quadruple witching is the dramatic increase in trading volume, which can be a sign of increased market dynamism. All right, so what I want to do is I want to hit the journal. We're gonna hit the sectors. We're gonna look at some home builders. We're gonna hit the journal. I'm gonna show you how to set up the watch list or how I set up my watch list. We'll do a chart review. We'll do investor IQ. I promise you I won't be too long. I'm just gonna dive in real quick. So let's take a look at the sector. But first, we have to pause, do a slight ad. Um, we do offer financial services. We have consults, we have one-on-one strategy consults, we have business or nonprofit treasury management. We've got or fractional CFO. We have weekly market strategy, stock and crypto review for groups. That's our Wealth Builders Collective. We're also coming out with an options course. So if you want that options course, please hit the website, sign up so we can get in touch with you. Please leave a note, options, when you hit that page. So we'll know, we can easily identify who wants to be in that options course. And then we have private investment groups, which are invite only, or you can ask to be part of it, but you have to be voted into those private investment groups. We have courses and ebooks covering debt, budgeting, saving, investing. So make sure your foundation is good. Make sure you have emergency savings, 3 to 6 months. Some people say a year. That could be very difficult. And then what we want to do is start investing. You can actually start investing while you're building your emergency savings. Um, we want to make sure we have enough emergency savings to handle an emergency. But anything over that, you want a nice cushion, like if you got 2 months, but we can start with $5 a day. Robinhood, Cash App. These are some fantastic platforms that have enabled retail traders, everyday people such as you and I, to access the market. And when we access the market, what we're doing is we're leveraging our money. Um, you go to work and you get paid a certain amount. Now, if you invest, that money is working for you on your behalf. And then you get to collect that. And it increases your net worth. And we know that over time, the stock market contributes about 7 to 11% um, annually on average. And so we want to get you to a position where you're not paycheck to paycheck, where you're not struggling, where you're not surviving, but where you can thrive. Because only when we can thrive, we can start to say, hey, I'm passionate about that. I want to do that. And then we have the passion to do it. But when we're surviving and living paycheck to paycheck and minute to minute and hour to hour, it's very difficult. It's very stressful. It takes a toll on mental health. And so this is why we want to partner with you because we want to get you across that hump and into this greatness so you can be great because everyone has greatness in them. All right, I'm done off of my high horse. Financial wellness workshops for corporations and nonprofits. Just a few more plugs here. If you want to contact us, hit the website. We'll take a look at the website and check out our Investor IQ Stock Momentum Screener, please. Sign up for that Wealth Builders Collective. And remember, a doctor protects your health, an investment expert protects your wealth. So if you stayed through that presentation, congrats, kudos to you. Give yourself a pat on the back. I appreciate it. We're going to escape out of that. That was our Canva presentation. We had to throw that together because things are happening this week, and I want to be with you while things are happening on these important weeks. So if you ever need the mantra, you can replay the video. You can hit our website. This is where it's at, right at the bottom of the home page. And so what we'll do here is we're going to hit, let's go to, actually, this is a public page. That was my building page. Check out our Google. We've got great reviews. If we've worked with you, please leave a review on Google. This is our Investor IQ dashboard, and I've got my journal pulled up as well. So we're gonna drag this over here. We're just gonna do one peek. Okay, one peekaboo. Nothing wants to work well right now. So, all right, there's the dashboard loading live data right now. Incredible dashboard. Doesn't have the full suite of 20,000 stocks or however many they are, but they have the main stocks that are grouped, that are popular, that we believe that have potential. And so if you want anything added here, if you don't see anything, please let me know. And we'll get that added. It's just a matter of adding the symbol, and then the data will grab everything and you'll see all the data for whatever tickers that you need to see. So I want to jump over here. Actually, I'm going to jump into trading view. I'm going to connect here. I'm just going to go to my watch list. So this is where I said support resistance plays. I've got inverse ETFs and sectors. And then we have indexes. So we believe in a top-down approach. What are the indexes doing? What are the sectors doing? Because we have to take risk out of the trade. I cannot emphasize this enough. If sectors are up and your stock is in utilities, and if indexes are up and sectors are all up but utilities, and you selected a utility stock, you might not enjoy the gains because the utility sector is holding you back. And so we want all cylinders. We want firing on all cylinders. And what that means is indexes are high. Now, if you, and the opposite if you're bearish or you like to do put strategies, but indexes high, sectors high, stock, high CCI, high RSI, high MACD, moving average crossover, cut pattern. So all of these right here, this is my list that attaches to my journal, which is right here. And so what I do is, this is a cup pattern. So all of them may be baby cups, they may be small cups, but we like it to form over weeks at a time. You might see some cup patterns on a daily. This is the daily, this is the weekly. And so what we want to do is just kind of go through here. So this is how I set up the watch list. That's just kind of, that's how I set it up. You can see, I don't know what this is. It looks like it's kind of coming along, but oof, that doesn't look too good yet. Oh, that was actually a handle. Check it out. So if we go back, sorry, my computer looks so slow, but this is the cup. A cup went up and now it's trying to form a handle. We had a little static here. Usually the handle forms right off of the cup. So we had a little range here, but just trying to give you a little description. So here's another cup here. That might be, so this is a beat up stock probably. Yes, it is. But we still have that small cup. And if you don't like the cup, we can actually extend this range because we have more data. And so we can just build that up. So this is the range that the stock bounces around in. You pick it up at Let's put this down here. So we had some leaks here, here, and here, but pick it up around, wherever you choose to set your support. This one, I don't know. I'll have to blow it up and really dig in, but around 830, 824, 8, you know, 8 and 850 is probably a good price. And then we've got $10 upside. Now we're already at resistance. So what is this thing going to do? Going to bust through or not? If it busts through, that's our right side of the cup building right over here. Now I'm interested. Right now, we're just letting it work out, do its thing. A-okay. Now I'm very interested. Check this out. This is a huge cup here. There's a smaller cup within the cup. So I'm going to draw that for you. Look at that. That, boom, boom. There's another cup here. So this cup completed. This cup completed. And then we have a little handle here that we're trying to get into. So I actually got into this trade this week. It pulled back far enough. And so long as we don't break this parallel channel, we should be okay. I might have got in a little too high on this because we see the parallel channel support is down here. And we see that this price action has hit support once, twice, three, four times. One here, one here, one here, one here. But nice, beautiful cup and handle. This thing has performed very well if you just take a look. So we definitely needed a pullback. This security went up 133%, which is ridiculous. And then we pulled back about 50%. If we round off 48%, but 50%. So that was a healthy pullback, and since we pulled back, boom, back to the uptrend. So now we've got a nice little pullback. This is indecision right here on the daily. We don't know what's going to happen. But if this price action follows trend, true to trend, and if the market acts terrible on Friday, we should be able to see 54. And so I did get into this. I see a small, slight potential bounce. We did see that airlines might benefit. And so we'll just set a very short stop loss. If that thing drags out, we're out of there. And so what can happen Friday is you can get bounced out of your position. It can drag, create a long wick, and then bounce back up, and then go positive. I hate when that happens, but I mean, you have to stay disciplined in your approach and make sure that you don't want your account to bleed. That wouldn't be good. So this is how I set everything up. All of these are in here. Have come from the Investor IQ dashboard. They've come from here. And so I am fine-tuning the strategy. What I want to do is some cup patterns, they might lose some momentum. And I'll show you some broken cups. I've even got a whole record of broken cups. Chipotle, Dutch Brothers, Kava, Fidelity, and Trade Desk, Viking Therapeutics, all broken. So cups don't always fill. And then I'll give you some cups that did fill. PPL, Nano Nuclear, Amazon, Walmart, Alphabet, SoFi, Reddit, Ameris. SoFi has been very good to me. Chart Industries. And so sometimes they will fill, sometimes not. It's important to make sure you know your exit and that you don't risk too much, that you don't stay in the trade, that you set your stop losses. So that's kind of all I wanted to cover today. This is the journal. I'm not going to, we can go through maybe one trade, something I'm interested in, because I actually picked up Alaska Air today. So let's take a look at Alaska Air. I've got it here. We've got a $59 entry. Ooh, yikes. It's at 58.49. We've got real-time data in here. It should be 58.49. Let's see if anything happened after hours. No, it did not. Nothing happened after hours. I mean, the pattern looks healthy. If this breaks, what I'm gonna do is like this is the 9 day. This is 21. This is the 50 days is 200. So investors came and saved the 200 right here. And so hopefully that's a bounce off 200 and we're going higher, but we'll have to see. So the interest rate cut should bode well, and with oil prices low. But I know A-OK. They came out with, they said some bad news investors really didn't like. The bearish quarter three view on high fuel costs and operational issues. So um, they didn't get a, they did not receive a downgrade though, I don't believe. So yeah, I don't see any downgrades here. Okay, so that's pretty much it. If you want me to jump into the journal, if you want me to show you Investor IQ, we'll do a separate video because I know I've kept you a very long time today. I just want to kind of let you know what tools you have available to you while they are free because we're going to close this up for members only. Um, you've got everything on one page. You can chart here so we can take a look at something hot actually right now. Let me see. Let's look at Oracle and ASML and Coinbase. So let's look at ORCL. All right, let's move that chart out. So Oracle's just been on fire. Look at that. Broke out crazy, and now it's pulling back. So you see that gap there? That gap could fill, or this could be a new support. Depends on what happens with it. So next, I'm gonna go to, and I usually don't find mine from here because this is just hot stocks, right? And we can go, actually, we can go here to see all the hot stocks, and we can go look at that. There's way more. We've got Monday on here. We've got Plug Power, Lee Auto, PDD. Let's take a look at PDD. Um, look at that. Oh, look at that. That's a larger cup. Let's see what's going on here. So larger cup, 162 to the upside. 153, and we're at the 133 level. So I can see this because I can eyeball it. I can put it on the weekly so you can get a better, so it's not so choppy for you. But you can kind of see that. So this was a cup, but then it kind of trailed off. So I don't know. Probably want to get it down here at 95 if possible. I mean, I don't know. Let's look at Mara. I just want to get you a clean cut pattern out of here. Um, we can actually see here, this is ascending triangle. Um, you have a flat bottom and then a flat top, and then it's more like a bull flag. But we've got that flat top, and then we've got that. So it'll come to a point. I can't draw on here. We're gonna try to enable drawing for you guys, but either it's gonna bust up or down. And so we'll see that. So let's try. I wish I could have found you guys something awesome. Let's try Eli Lilly. Why? Maybe. Let's take a look at the daily because it'll pan it out a little bit. Kind of wild. This one is a volatile one. Let's look at Charter Communications. Let's see Charter. Let's see HTR. Will that one fail? I don't like that one either. So let's go to performance and open. I know open had a cup pattern. I know that easily. Look at that. So open might pull back though. 24 will be the next. I mean, we've got a few stops here. We've got 11, 27, we got 15, 13, possibly 20, possibly 24, and then we've got 31. If this cup starts to fill out. So what we want to do is put out the moving averages on here and see when that moving average cross happens, get into that trade. Thanks for staying with me. Thanks for letting me tinker around here and show you how I use this. I appreciate you. My dog is telling me it's ready to go. It's dinner time, so hopefully you'll be eating dinner too. from all of us here at Biddles Investment Group, thank you so much for your time, and we'll see you soon.